What up? What up? What up? It's your resident online mortgage lender, Robert Lewis, NMLS license number 180100. I hope the video finds you having an extraordinary day, night, evening, whatever time it is that you're watching it. So, the purpose of today's video is to determine, in my humble opinion, what the best down payment assistance program we have to offer here in the state of Texas. I am responding to a question from one of my preferred agents, Mr. Darius Holmes. I will make sure to put his YouTube channel in the description so that you can reach out to him, because if you don't know him and you're looking to relocate to the great state of Texas, specifically in the Dallas-Fort Worth area, also known as the Metroplex, you're doing yourself a disservice. So Darius, here's my best attempt to answer your question, my man. And I hope I hit the mark. Let's get into it. What is the best Texas down payment assistance program? So it took me a little time to put this together, but let's get into it. So there are several down payment assistance programs in the state of Texas that you might have access to. Let me say that off the top. Again, this is my opinion of the best programs, and I went about this process in this way. Ease of use for you, and not only you, but for the loan originator and or the company. Bottom line, there's a lot of loan originators that perceive down payment assistance programs as extra work, and truthfully, there's not a lot of money in the programs. For myself and my company, it's really a loss leader, but it's something that I have a heart to do to help those that are truly deserving of home ownership but need a little assistance getting over that barrier with the down payment and or closing costs. So again, ease of use for the lender, loan officer. Number two, the least amount of fees for you, the home buyer, okay, with the biggest bang for your buck, meaning the biggest benefit in the form of down payment assistance without recapture fees, okay, or repayment of the assistance, okay? And so that's the criteria I went about to make this happen. So I'm going in this order from my least favorite to my best or most favorite program in the state. These programs, again, are applicable to a wide range of potential home buyers. And that's really what my last criteria was. I needed programs that a lot of people have access to, okay? So again, before I get into it, and just to summarize, right? Ease of use, biggest bang for your buck, okay? No repayment, access for a lot of people. Here we go. The SETH program, or we call it the 5-star program, and it's administered by the Southeast Texas Housing Finance Corporation. The servicer, if you do this program and your loan, the place in which you're going to make your payments to, is going to be U.S. Bank once the loan is sold and your servicing starts, okay? So here are the highlights. The 5-star Advantage program. First of all, there's no first-time home buyer requirement, okay? And for some people, that's a huge thing. Now, you have to understand what that means, and I'll give you the definition of what a first-time home buyer is. It's anyone who has not had ownership interest in real estate within the most recent 3 years, okay? So moving forward, you can do FHA, VA, USDA loans, okay? USD or Rural Development Loans with the 5-star Advantage program. They have a minimum credit score, minimum FICO score of a 640. And at the time of this video, a 45% debt to income ratio for FHA loans, okay? Now, if you If you're wanting to go higher than that, let me back up. FHA loans, USDA loans, and VA loans is 45% rate threshold, if you will, for those government loans. And then if you want to go higher than that, up to 50%, just for FHA loans only, you have to have a 680 minimum FICO score. And let me pause there. When I say minimum or middle is a better term, in the mortgage business, we as originators, when we pull your credit report, we're going to pull what we call a tri-merge with all three agencies, Experian, Equifax, and TransUnion. And so we're going to throw out the high score, and we're going to throw out the low score. So when I say minimum FICO score, I mean the middle score, and it has to be a 680 or higher. Okay. Generally, this program it is accepted statewide, except for anyone in the city limits of El Paso, Grand Prairie, McKinney, or in Travis County. And the reason being, as I alluded to when I first started this video, there's a lot of programs. And just for your knowledge, you always should look at the city level, then go to the state level, and then the federal level. Anytime you're looking for these programs. The deal is, though, with this program, it cannot go into those areas because those areas have specific programs for those cities and or the county, Travis County for the state of Texas, or Austin, which is the state of Texas, and Travis County, if you will. So no recapture tax, okay? When there's no recapture, and that's another term, recapture, I'll kind of go over that briefly. What that means is on some of these programs, there's a potential for you to have to pay federal taxes if certain thresholds are met. If you guys want to know more about that, let me know in the comment section, and I'll come back and do another video specifically on recapture taxes. But for now, we're going to move forward. There is, excuse me, income limits as well as purchase limits for the program, and that those are administered by the program, okay? And you can find out what those limits are via the website, and I'll show you that here before we get off. And then there's no tax transcripts or tax transcripts or tax returns required by the program. Now, the reason I'm saying the program is because your lender more than likely is going to require your, at minimum, a 4506T, where the servicer, U.S. Bank in this case, if they have to go back and audit the file just to make sure your income based upon your W-2 income and what you qualified with is accurate, at minimum, you'll need that. But I know most lenders, we are going to get a tax transcript, but we don't have to deliver those to the program. So let me just clarify that. As we move forward, let's see here. There is a home buyer education course that's required. One of the reasons I don't like this program is because it's $100 cost if you're applying, just one person, but if there's two or more people, it's a $60 cost. So kind of expensive in my opinion. Home types or property types that are eligible: single family, duplex, triplex, or fourplex, right? Now, anything that's duplex or more, and well, let me back up. All of these properties, you have to have or keep them as a primary residence, meaning you're going to live in one of the units, okay? But in the duplex, triplex, and fourplex, the property must be at least 5 years old, and it must have been held, somebody that you're buying it from, if it's a duplex, triplex, or fourplex, has to have lived in one of the units as a primary residence. So this isn't for investors or for new construction on the multifamily, if you will, on the duplex, tri, and quad. Those have to be 5 years or older. But condos and townhomes, and then manufactured homes for FHA, VA, and USD are rural development only, okay? And I'll also say here, I didn't put it here, but any manufactured home, your always best bet is to have a double wide or newer, and it has to be affixed to the property to the land properly per the loan that you're looking to do. VA, FHA, or USDA, they all have guidelines. Your lender, or if you reach out to me, I'll know how to advise you going forward on that. So when you look at this program, and we look at the fees, because all of these programs have program fees, okay? This is the highest of the three programs that I'm going to mention, okay? And so the admin fee is $250, $80 for tax service fee, $400 for funding, like I said, $100 or $60 for the home buyer's education, for a total of $830, okay? So moving right along, now we're going to get into the Texas Department of Housing and Community Affairs, or TDHCA. Now, before I do that, let me go back to the Southeast Texas Housing Finance Corporation. This isn't a state entity, okay? But the next programs that I mentioned are state governed, if you will, okay? Now, Idaho Finance is the servicer, the master servicer. So again, once these loans go through the process and they're purchased and your servicing rights are assigned, you'll be paying a place called Idaho Finance, okay? So now, there's a couple of different programs here. And you know what? Let me do this real quick. Let's do this. The first one we went over was the Southeast Texas Housing Corporation, right? Now, this next one we're going to go into is My First Texas Home, okay? And that's this one. And it's administered by the Texas, Department of Housing and Community Affairs, right? TDHCA is the acronym, okay? So now let's get into it. There is a first-time homebuyer requirement. Now, again, that first-time homebuyer requirement means that you cannot have owned property, real estate, right? And had security interest in the most recent 3 years. So in order to prove that, I'm going to scroll down here. I'm going to jump ahead a little bit, but we're going to require, or anybody doing these loans are going to require, your most recent 3 years tax transcripts or signed tax returns. That's how we vet and verify that you have not had interest. And really what we're looking for is a 1098 for the mortgage interest that you would get if you own the property, right? So that's why you have to have those tax returns for the most recent 3 years. Now, this program, the down payment assistance, okay, and the SETH program as well, the maximum assistance that you could get is 5% of the loan amount, 5% of the loan amount, okay? But this program comes in the form of a second lien. So up to the 5% will come in the form of a second lien, 0% interest, and there's no monthly payments that are required. However, whenever you sell the house, refinance the house, okay, or transfer or pay off the first mortgage for whatever reason, then you have to return the money, okay? Don't really like that, okay? Loan types, FHA, VA, USDA, and conventional, or Fannie Mae, FNMA, HFA. Long story short, all those acronyms on the conventional side, that's a conventional loan, Fannie Mae, and that's for your home ready loans. And really specifically, those loans are important for those that fall under 80% of the annual median income, AMI. That's another acronym that you might hear me say, okay? But this program only allows for the Fannie version and not the Freddie Mac version of the HFA program, if you will. So the minimum FICO score is 620. You can go up to 50% max debt to income ratio with an AUS automated underwriting software approval, okay? 45% max DTI if you have to do a manual underwrite, okay? FHA, there's manual underwrites. Some lenders even allow for conventional manual underwrites. Again, whoever your lender is, or if it's myself, after you have applied and things of that nature, we will be able to direct you in the way that you need to go. So there is a potential recapture tax. Again, there's certain things that have to happen with some of these programs that might expose you to recapture. Again, if you want to know that more in depth, reach out and we'll talk about it. But there's income as well as purchase price limits. Let me pause there. This isn't for, somebody making 250 grand. that's just looking for a loophole. However, if you're dealing with the right lender, a lot of these programs will allow for just the income on the application. So what that means is it's very crucial for you to pick the right mortgage advisor or loan officer, one that understands the guidelines and knows how to navigate. Because I have helped folks that made more than the income guidelines call for. Don't do it a lot, but in some cases it's applicable. I'll give you an example. Sometimes you have higher income folks that have been in college, secondary education for whatever reason, and so they might be making decent money, but they don't have any reserves and things of that nature. So I don't see that as skipping the line. If you call me and you got $10 million, I'm like, come on, man. But anyway, I digress. Income limits and purchase price limits, right? There are those that are applicable. Now, there's a homebuyer education course, but with the TDHCA, if you go through their system, it's free. There's no cost for it, unlike on the SETH, right? You could do single, and I've spelled that wrong, right? Let me change that. Single, duplex, condo, townhomes, and manufactured homes. So notice on this one, I didn't say triplex or fourplex. Duplex is the largest home that you could buy. There are no age requirements, but you have to live in one of the units as a primary residence. That's key. As far as the fees, $275 compliance, $150 loan review, $85 tax service fee for a total of $510. Not bad at all. Now, the second program that the TDHCA offers is called the My Choice Texas Home, right? This program here, My Choice Texas Home. Now, there are no first-time home buyer requirements with this one. Now, what that means is this. You can be moving up. You could be living at 123 Main Street, okay? And if you meet all the other requirements, you could be buying 4567 Move Up Street, all right? And as long as you move in the new house as your primary residence, you can maintain this other property. And if you can qualify and rent it out, that's something that you could do. So you don't have to be a first-time home buyer. You just have to make that new home your primary residence. Now, this also will be in the form, whatever the participation, 2, 3, 4, or 5%, will also come in the form of a second lien, 0% interest, no payment. But whenever you sell, or if you have a refinance, at some point in time, you have to pay the money back, okay? FHA, VA, USDA, and then the conventional or the Fannie Mae HFA loan is available on conventional loans, limited to the 80% AMI, okay, annual median family income, right? So you got it. It's only to the 80% of the annual median family income. If you need some help with that, let me know. Okay, the minimum FICO is 620. 50% is the max debt to income ratio with AUS approval. 45% max DTI with manual underwrite. Okay. And again, 1003 income only. Now, it's important. I alluded to that earlier. Cosigner income included, however, on this one. So if you have a cosigner, right, they don't live in the property. They don't have any interest to the property. They just help. They're just liable on the loan with you. We have to use their income as well, and that could kick you outside of the income limitations. But it also could help for like those folks just coming out of college, like I mentioned, if you have a parent or something of that nature. There is, again, the home buyer education, but it's free. Single, duplex, condo, townhome, manufactured homes. Remember, manufactured homes, double wide or larger, affixed to the property per the guidelines, the lending or the loan guidelines that you're going with, okay? As far as the fees, again, they're going to total $510, right? And so, again, that's my middle of the road program, okay? I don't like the SETH because of the fees, right? I don't like this one because you do have to pay back the assistance at some point in time, right? But there's some higher debt to income ratios there, and there's some stuff that you could do that you can't do with the SETH, right? You got to have there's no minimum FICO. I'm sorry. There's no minimum FICO here. Oh, let me digress. I'm going into another program. So that's the My Choice Texas Home. Now, I want to talk about MCCs, okay? This is a bonus. A lot of people don't talk about mortgage credit certificates, okay? TSAHC has one, and then TSAHC has one, and then the TDHCA has one as well. And I know this video is kind of long, but y'all rock with me, okay? I'm trying to show you how to save some monies. So now, when we talk about the mortgage credit certificate, basically what that is this, and with the TDHCA, they will allow you to take up to 30% of the interest up to $175,000 loan for a maximum of $2,000 a year. Or if you decide to take the 20% MCC for anything greater than $175 loan, you can, there's no cap, there's no maximum on the interest. So how it works is this: $100,000 loan, 3% interest, multiply it, that you take the annual amount and you take either 30 or 20% based upon the route that you go, okay? And then that percentage, again, it's going to be capped at $2,000 if it's a 30% MCC, but you can use those monies for a myriad of things. I'll just say this: it is a true credit. So meaning if you had, say this scenario that I gave, the MCC, the interest that you use, that up to the 30% of the mortgage interest that you pay annually could be used as a tax credit. And say you had a $500 tax bill and that credit equal to $500, it would wash. You wouldn't pay any taxes there. If you didn't have any tax bill for that year and you had that credit, you can carry that forward up to the next 3 years. So this is something very nice. As your income increases, this is another way for you to minimize your cash outlay. With all of our largest expenses is with taxes. You'd be surprised. You got to be a first-time home buyer to get the MCC. And a lot of people, especially, if you're needing down payment assistance and things of that nature, there's something that you want to get. And a lot of loan officers just don't know about it because a lot of loan officers don't do down payment assistance. But anyway, that's what an MCC is. Now, the other side, the other 70% of the mortgage interest that you're not using, you can still take that to your tax preparer and they can help lower your income to expose you to less taxes. That's how it works. So the lowering of your income to lessen your exposure to taxes, and then you have up to 30%. That's a true tax credit. Now, when you go, if you get this and you go to your tax preparer, it's tax form, what is it, 839? Let me scroll down here a little bit. It's the IRS tax form 8396 is what you want to tell them about, because a lot of tax preparers or even CPAs don't even know about this, but they can pull it up and find out about it. And great thing for you to have. So whenever you are getting the MCC, there's a 3-year tax transcript or signed tax returns. Remember, you got to have that to prove that you haven't had a home, your first time home buyer. And it's good for single, duplex, condos, townhomes, manufactured homes. And the fee for this is $400. Okay. And this is the TDHCA program. All right. We're almost finished, guys. So now I'm going to talk about the Texas State Affordable Housing Corporation, TSAHC, and their programs. Okay. Now with TSAHC, their loans, or your loan, will be serviced by Lakeview Loan Servicing. Let me get myself situated here. Okay. And the first program that they have is called the Home Sweet Texas program. Okay. And it's really applicable to anybody in Texas that meets the income purchase price levels or falls underneath those thresholds. And then if you qualify for the loans, right? But the minimum FICO is 620, FHA, VA, and USDA. Okay. Now here's the caveat with the TSAHC loans. And this is something new due to COVID, one of the overlays that COVID brought about. But if you have a 620 to a 639, you're going to pay 0.5% in discount points. Okay. And then 640 and up, the max DTI is 43% if you have to do a manual underwrite. Now, if you, as long as your middle credit score is over 700, you can go above 45%, and there's really no cap. I've gotten, some govies approved for folks that where it makes sense with 55, 56% back end ratio, but that's not really the norm. The minimum FICO for the conventional loans, right? The HFA preferred and the HFA advantage, right? Freddie Mac, Fannie Mae, home ready, home possible. Okay. The reason those are important is because whenever you do those conventional loans, you get a discounted MI, mortgage insurance rate. Okay. Let me back up. I don't want to confuse you guys, but minimum 640 credit score. Okay. The income limits and purchase, there are income limits and purchase price limits. Okay. Now the program doesn't require tax returns, but again, we as lenders, we're going to get your transcripts at least for the last 2 years, and you're going to sign a 4506T. Now there's a home buyers education program with this, but I know of several free ones that you can do, and I've used them with success. So I'm going to say the program is free. You could do a single family, duplex, triplex, fourplex. Again, with this program, the duplex, triplex, or fourplex has to be at least 5 years old, right? And it has to have been in use residentially for residential use only. And if you're going to do the Fannie Mae program, the maximum loan to value is 95%, meaning you got to bring 5%. And out of that 5%, 3% of that has to be from your own funds. Okay. And you can also do condos, townhomes, manufactured homes, again, duplexes or larger. And then as far as the fees are concerned, they really total up to about $535. Okay. So about $25 more than the TDHCA programs. But with these programs, well, with this one in particular, you can get a grant, or on the conventional side, you're going to get a forgivable 3-year second lien, 0% interest, no payments. Now, if you pay off the home, or if the loan gets paid off within those 3 years, then there's some recapture that takes place. But if you're going to be in the home 3 years, 36 months, it disappears 136. So after 3 years, if you do the conventional route with the 3-year deferred forgivable second, then you don't owe any of the monies back. But on this one in particular, right? 6 months, after 6 months, it's a grant, no harm, no foul. You don't owe any of the monies back. Okay. And there's also what they call Homes for Heroes. And Homes for Heroes kind of is in line with the Home Sweet Home. The difference here is that if you want to do the MCC for the TSAHC, there's a cost. Okay. And that $400, actually, you know what? Another typo, it's $500. That $500 can be waived if you are one of the approved heroes. Okay. But there's a bond, and there's no monies in the bond at this time. There was, I guess almost 1.5 years ago now, but the bond is done away with. All the monies are in the grant form. So if you're a hero, again, and you want to get a mortgage credit certificate from Texas Savings, you know what? I don't want to butcher it. From the Texas State Affordable Housing Corporation, TSAHC, then that fee will be waived if you're a veteran. I apologize. If you're a veteran or a hero, okay? So I won't go over the MCC again. The only difference between this MC and the one with the TDHCA is that there's a 20% MCC and there's no cap on the monies that you can get. So remember, on the TDCH, there's a 30% MCC with a $2,000 cap, or you go down to the 20% with no cap. Well, this one is only 20% with no cap. Got to have the tax transcripts for the 3 years, and there you have it. So, man, I know this video was long. Let me do this. I'll say this. If you have any questions, you could reach out to me. I'll have my information. You know, I'll just tell you 210-570-6382 is the office line. Or more importantly, reach out to Mr. Holmes, Darius, if you're looking to purchase. And there you have it, guys. My time is up. I thank you for yours. If you're looking for a DPA in the state of Texas, there's several of them. The deal is you need to consult with your trusted advisor to make sure you pick the one that's right for you and your family. And then when it's time to get out and find that dream home of yours, you would be remiss not to reach out to Mr. Holmes. So there you have it. You guys be good, be blessed, not stressed, forget about the rest. And until the next time, peace.